Morning, everyone. Welcome to Cardano Q&A. We are end of June, heading into July now. So things have moved on. We are into Project Catalyst Fund 12 now, which is probably the most recent bit of exciting news around Cardano. So votes are now open. If you have registered a wallet for staking and registered a wallet for voting, then you can now start to actually use your vote power from your ADA in deciding the future of development on Cardano. So there are about $60 million worth of ADA about to be distributed to teams across the Cardano ecosystem who are all proposed ideas for building out blockchain solutions in some way, shape, or form. Not necessarily all technical ones. They can be related to Cardano in community ways, in outreach ways, but ultimately they are got to promote or propagate further the Cardano blockchain into the world. And Project Catalyst is in Fund 12 now, so this is the 12th iteration of the fund. Things always adapt and change fund to fund. But this time it's pretty much the same as the last time round. If you have registered to vote for the last fund, then you can vote in this one. You just need to get your Catalyst voting app. That might need an update, and then you should be good to go. The way that voting works on Project Catalyst is you have your mobile app at the moment, and you have your wallet. Once you've managed to find a way to scan a QR code displayed in your wallet with your mobile app, then that's the registration process for voting. And then when it comes to actually voting, you don't need to do any more camera shenanigans, so you can just do it from your mobile phone. However, nobody likes really working from their mobile phone when you're reading proposals and selecting from 900 different projects. So they are moving next fund to Catalyst. Well, the hope is for next fund to be moving to Catalyst Voices, which will be a voting center desktop iteration where you'll be able to actually register, choose proposals, and cast votes all from desktop, which will be a much more pleasant experience with no context switching between devices and so on and so forth. So that should be much smoother. So that's what's going on at the moment. So we've got a few things to talk about. Last week we looked at Nike, the newest, shiniest meme coin on Cardano. And I don't approve of meme coins. I think they're a very sort of cynical outlook at human nature. They're a study on humanity rather than a study on blockchain technology. But nonetheless, humans are very much a part of blockchain, and so it is worth observing, keeping an eye, being aware of meme coins, their behavior, their activity, and how that interacts and affects everything around it. So if you want to invest in meme coins, I would do it with your gambling money. This is pure speculation on something going up, knowing it will come down just as fast at some point. And when you get in, will determine on whether you make any money or not. Nike is very early, so in terms of putting some gambling money into something, then yeah, you could look at it, but yeah, certainly don't put anything more than you're very, very willing to lose. It's interesting to look at Nike though, because it is a phenomenon that's just spawned from social media interactions, showing which is an indicator of how healthy the Cardano ecosystem is in terms of community. That's how I see it, certainly. So the backstory of Nike is it's Charles Hoskinson, the founder of Cardano, posted a picture from his ranch of a pig he rescued. And this pig he's called Nike. It's a very comical looking pig. It was overweight. It had been living in an apartment and overfed. And it's now very happy on a farm, getting healthy again. But it's a comical looking pig, shall we say. So he posted that picture on Twitter, and instantly someone grabbed that picture and minted a coin and put it up for sale and now it is garnering a whole load of degenerates buying into this meme coin, and it's accelerated rapidly. So let's maybe get into some screen sharing. So what? If interrupt me at any time if you've got any questions on anything I'm saying, also anything elsewhere unrelated. If you find me dull, then just interrupt me, please. Otherwise, I just keep rambling. But if we look at, pending any questions, if we look at Nike, we can have a look at how it's done in the past week since I last spoke about it. So this is Eternal Wallet you should be seeing now, which is your window into the world of blockchain. If you come through my tutorials, it's a community built browser, excellent work, complex in terms of user interface, not the slickest, but most flexible, most powerful, most stable I've found. So I use it. If we are looking at tokens on Cardano, then the number one tool at the moment is Tap Tools. And this will show you all the Cardano native tokens available in the ecosystem. So you have the blockchain protocol itself, and that is powered and run, and fees are transacted in ADA, Cardano. ADA, and ADA has a smaller denomination called Lovelaces, if you didn't know that. So ADA Lovelace is being memorialized in Cardano, and the rest of the tokens we see on this page are Cardano native tokens. So they're not layer one default coin. They are alternative coins within the Cardano Cardano ecosystem. So like second on this list here is World Mobile token, and then below it we have AGIX, and these tokens are high market cap tokens in and of their own right, and they have utility entirely separate from ADA, but they're listed here, and that's where you can find, if you're looking for investment opportunities, you have your Bitcoin, which is a risky asset in terms of global investment vehicles. And then you can have Cardano, which is a risky asset in terms of crypto investments. And then you could have SNEC, which is a really risky asset in terms of Cardano native tokens. And so you're always adding on risk. Bear that in mind. The smaller coins you go to, but you're also potentially increasing your rewards if any of these tokens do well. So it's worthwhile if you are investor in cryptocurrencies, you believe they're the future, then do look at some of these alternative coins, these smaller cap coins, to see which ones have utility, which ones have value, and might turn into something useful. But just an example of the money that's sitting in the wings, ready to invest in cryptocurrencies, in tokens, looking at meme tokens and their rise. It's an interesting way to do it. So this is Nike. I don't know if I can get the picture any bigger. Probably won't let me. No, I don't think so. But Nike is this beautiful pig, and he's a good pig, is what we know about Nike. But you can see here that it launched on the 17th of June, so less than 10 days ago. And in that time, it has gone from 0.00003, hit a high of 0.0226, 2264, something like that. And has dropped down again to 0.0139. So in terms of looking at an asset, if you're wanting to invest in a traditional asset, you think you'd wait for a rise and then a pullback, and then maybe if you wanted to get in on that asset, you would go in. So that's one thing to consider. But bear in mind, this is just as equally likely to disappear to nothing, because in the meantime, there's been other meme coins launched. One of which was called Gonad, which is which is what it is, and that has plummeted rather than risen. So the chances of a meme coin doing well or doing badly are purely based on the infantile nature of humanity. And people like Nike, he's a good fig, and aren't so keen on Gonad, it seems. But yeah, we'll see. So yeah, massive price movements in a short period of time. So if you put in, 10 quid here, it would now be 1,000 up here. So that's the sort of dramatic difference you can have by looking at meme coins. But yeah, certainly not any advice going on here other than just interesting observations. And on the back of that, the power of meme tokens is it does drive creativity, inspiration. And so, within 10 days of that token being, not existing in anybody's mind, it now has its own full-on branded Nike swap.io website where you can connect a wallet and you can buy Nike through here or sell it. So it shows that people, once motivated because of price appreciation, can kick out tools very quickly. And that's an indicator of the depth of the tooling we now have on Cardano. The ability to build out applications is far, far more rapid than it was in the past year. And certainly 18 months ago, we didn't have any of this ability whatsoever. There was no tooling. There was no smart contracts at the start of the last bull run, certainly. Not start of the last bull run, at the peak of the last bull run. And so none of this could have been built. This time round, people are knocking these out within a few days. So it is an interesting observation to make. And you can see the sort of volume of Nike orders that are going through this exchange. 200 ADA will get you 5,000 Nike tokens. And yeah, meme tokens invariably have something puerile and infantile about them. So this is Nike the pig, and he is overweight but interested. The background for the page features flying Nike. You have Charles Hoskinson holding his pig, and also features Charles Hoskinson's Black Hawk helicopter, because that's what you do. And this all attracts, young minds to exciting times in finance. It's a bit less dry than Wall Street, certainly, and things like that. But yeah, that's all I really can say about Nike. One thing I do like to look at for this audience is stablecoins, because that also feeds into the investment activity in any chain. And so Charlie 3 is the best functional oracle on Cardano, and it has a record of the liquidity in USDM. USDM is a stable coin on Cardano, its own, it's a Cardano-born stable coin, and not like any of the huge ones out there, like Tether and Circle's iterations of USDT and USDC. Much smaller caps, but growing at a decent rate. So I think last time we were at 2 million. This time we're at 3 million. So the fiat world dollars are flowing into this stable coin, and all that provides a reserve for people to use to get out of their trades in DeFi land back into the reserve currency in an easy, quick, efficient way. And at the moment, this is a very young stable coin, and it is 100% collateralized fiat, $1 in the bank for every dollar on chain. And this oracle participates in ensuring that that's the case. It's got access to the bank balance and shows how much US dollars are in the bank balance, and correlates how that correlates to how much dollars are actually on chain. So if you do buy and hold some USDM, you know that you can go back to the company behind it, Mehen, who are rebranding to Monheta. They actually will give you a dollar for your digital dollar, minus a fee at the moment, which is a chunky fee, but that will come down over time. So that's giving some assurance, and it's trying to create a flow of money into digital equivalent that we can then use within our trades and DeFi land of Cardano. But that's always, interesting to see that growing over time. Keep a quick eye on it. So any questions in and around tokens? Give me a shout. Give me 1 second. I'm just going to jump off to shut this door. Cool. So, like as a precursor, just been on Luca's Crypto Hour, where he looks at the macroeconomic world, how that impacts crypto, and a multi-chain sort of approach to the call. This Cardano one is much more focused just on a single chain, but we are rather willing to talk about others. But within it, we're going to do a session in a couple of weeks together, Luca and myself, deeper diving into Cardano for everyone outside of that. So if you think there's particularly interesting topics or particular questions you want answered, you'll have Luca's mind available as well as mine, that's related to Cardano, then please do drop them into Discord or into this chat here, or just pipe up a microphone and put that to me, and that'll be good topics for me to elaborate on in that call. So one of the things that I probably will touch on is using stable coin pairs to actually then look at gaining a yield from DeFi using stable coins. So you've got a foot in the fiat world still. You're thinking, yeah, the dollar is a reserve currency. Its volatility is far lower than any crypto tokens at the moment. So you want to see your dollar, your real world dollar value increase. So you might buy a pair of stable coins and then bring them to an exchange like this one I'm about to show you, Minswap, and actually take, $100 of USDM and $100 of DJED, two stablecoin technologies on Cardano, USDM, which is a fiat-backed stablecoin, dollar in the bank, dollar on chain, and then you've got an algorithmic stablecoin in DJED, which means that there are multiple cryptocurrencies over collateralizing $1 of DJED token on chain, and you can redeem that for ADA, which then you need to swap to get your dollar equivalent back out again. But regardless, DJED you can redeem for $1, USDM you can redeem for $1. Pair those two together, you can bring them onto an exchange and then start to earn yield. And so last time we were looking at that as a potential investment vehicle for people coming into the blockchain space. So this is Minswap, the largest liquidity exchange, decentralized exchange on Cardano. A decentralized exchange differs from a centralized exchange in that there is no human interaction with your wallet and the blockchain beyond the creators actually writing the technology, writing the code, putting them on chain, and then you can interact with them. So it's like having the rules written in advance, but enforced by technology rather than good behavior on the part of humans. So they have this liquidity earning potential on in DeFi that's you'll be familiar with from other chains, and the ability to earn within that is down to token generation, people swapping tokens between pairs, and having a way to earn yield by providing liquidity. So you take your $100 of DJED, $100 of USDM, which you've attained by some means somewhere. You pair them together and you give them into this smart contract. So this user interface that we're looking at now is really looking at smart contracts and letting you interact with them with your wallet. So there's no human that gets involved beyond this user interface, and the rules that are written into that contract, and that if you sign with your wallet to ask for your dollars back, you will get them back, and there's anybody can do to interfere with that. So even if this user interface disappears, someone could equally write a new one, or you could go into the command line interface and interact with that smart contract and get your tokens back out by sending in signed transactions. So it's a very robust, secure way, knowing that you don't have to use a human to interact with that at all. You might need a developer or someone who's crypto savvy if this user interface did go away, but that's perfectly doable. So here we have this stablecoin pairing that I'm leading up to. We've got JED, the algorithmic stablecoin, and Moneta, which is replacing Mahenbrand for the USDM token. And if you put a pairing of those things in, then you'll be able to earn an APR, so an annual yield of nearly 30% at the moment, which is a really strong return on any investment. And because you're using stable coins, you're de-risking yourself in terms of volatility against the dollar. And so earning 30% on your dollars is, a very attractive investment for people. So I'll probably be showing this as a potential for people to look at in DeFi from a Cardano perspective when we get into this call with Luca. But yeah, that's one certainly good proponent. There are higher yields available within it if you're willing to use more risky tokens. But that one in particular, I think is a good introduction for people. So if you want to pair your ADA with a meme coin, SNEC, then you can get higher yields, 39% there. And some of these tokens will grant even higher ones. Really annoying on this website, you can't order by yield, but there's a 38% with Clay, which is an NFT-based project, and that does claymation and is supported by such celebrities as Snoop Dogg. They're a UK-based token as well, so I've met the founding team. Good guys. We've got ADA Work. I've never heard of Work before. They're offering a 62% yield. It's all about the risk you're willing to take by holding these tokens and getting into them or not. So CBLP is 58% yield, and CBLP is a token for an upcoming lending protocol on Cardano. It's not even launched yet, but the token is available, has been available for a year or two, and it is offering a return on, you can get more CBLP by staking, by effectively locking your token pairing into this platform. And so the returns you'll get are 0.9%, 0.95% of min tokens being yielded. You get 0.41% will be in ADA, and 54% will be in 55% will be in CBLP token. You also get trading fees because people, once you've provided liquidity onto this DEX, whenever somebody swaps between those two tokens, some of the liquidity you provided will be used to carry that out. And so you earn a fee from those trades that happen. And that's at 1.86%. So if you find a token pairing that's particularly busy, that's got lots of trading activity, so if there was a Nike pair, then at the moment that might be one to look at because Nike's going crazy. But you'll earn a higher trading fee yield, but the token itself is very volatile, so it can up and down so much that you might not win in the end. Whereas some of these, like that stablecoin pairing or some of these more mature tokens, ADA and AGIX, lower yield, but more likely to retain their value over time because of that large market cap. So AGIX is a artificial intelligence related token. It's actually going through a transition at the moment. It was originally launched on the Ethereum blockchain. It then ported everything over to Cardano, and Ethereum is still available. Ethereum equivalent of that token is still available. And now there are other chains that have artificial intelligence related tokens, open source being a big tenet of their ambitions, and they're creating a new super AI token. So AGIX will be able to be converted into this new token that I can't remember the acronym for at the minute. but it's bringing in multiple chains to have this new super token, and I imagine that will be available on Cardano at some point, and vice versa. So if you are into this token, any of the longer term listeners, AGIX, and you've provided liquidity in any way, shape, or form to a Liquid platform, I think is the one in particular, Liquid Finance, then do make sure you, I don't even know, I'm too late to saying this now, but if you have interact with Liquid Finance using AGIX token, you need to extract your liquidity because I can't spell, because the token is being withdrawn so that it can be swapped to this newer token, and so liquidity is all being pulled out of that platform. Still can't spell. So yeah, if you are interacting with Liquid Finance at all, which is a lending borrowing platform on Cardano, then do come in and remove your AGIX because it is being translated into something else. So it looks like it's still do it because it has got liquidity on here still, so you can get out of your positions today. But yeah, do that today. Good. Again, hi Jane, do interrupt me if you've got any questions on anything. But I'm now going to look at the next bit of topic, which was last week. I was strongly encouraging everyone to get involved in voting in governance on Cardano, because we were deciding on who would form the interim constitutional committee, which is a body of community members who will be responsible for putting or vetting certain proposals in the governance architecture that's being built for Cardano, that will let us decide on the future direction of the blockchain itself. So that will include parameter changes to the chain and core factors of the chain that drive ability to earn on chain and value of the development decisions. So if you've got high value development change to be made in proposal stage, then they will be the ones who table it before others. So these are important functions. We had a vote that was a little bit small in voting power, but we have decided on 6 individuals or bodies to participate in helping us make these decisions on, or deciding what to make decisions on next in governance. So we've got the Cardano Atlantic Council featuring Adam Dean, B, Mike, Jennifer, Brito, and Chago and Rich McCracken. Multiple nations being represented in that coalition. And all of them are long-time community members who've worked hard within governance, within Project Catalyst, within stake pool operations. And so a good set of brains to, who've got a high amount invested interest in Cardano. So they are going to be looking to make the best decisions or table the best decision, make the best choices for the community. We've also got a nice Asian representation with Cardano Japan up there. And these guys really do a lot of work. Again, I'm not so familiar because of that language barrier, but Sarah Yun is a guy who I know who runs Socius DAO, which is a very socially conscious, decentralized autonomous organization within Cardano. Eastern Cardano Council as well, so that's covering another large portion of the globe with representatives from there. And from this group, I know Joe in particular, who does a great job in Project Catalyst. And so we'll have, has a great mind for really spreading power to the edges in empowering small local activity, which the blockchain is very very strong for. It's not just a it's a global tool that can be used locally in a powerful way, and that's something that Joe's very strong proponent of. Mauro from Argentina is a lawyer. He's grown up in the community. He's only 21, but he's already rubbing shoulders with political elite in Argentina. So helping onboard the Cardano Foundation with the Argentinian government, doing a great job there. And so he's got a and that idealistic driven South American outlook, which is so exciting at the moment. So great to have him on board. Scientific analytical tools, I'm not so familiar with. I imagine a business of some shape or form from the United Arab Emirates. And Joshua Stone, who's based in the US and heads up the Book.io NFT project, which is looking at collateralized or digitizing and making into a collateral of our intellectual property books as is their first target. But they'll be moving on to other assets over time as well. But very interesting Book.io project. And so that's our interim constitutional committee. They'll be active for, I think, a year, and then we'll have elections again for probably a much wider set of candidates, and there'll be a much larger voter turnout. This all just felt a little rushed and a little low profile. So if you did manage to vote, well done. But yeah, we can see from the sort of ADA, the volume of ADA that was used to vote wasn't particularly high when looked at in correlation with Catalyst voting or something like that. But yeah, great to just have people involved in governance, and this will only grow over time. Good. Now, one thing, and this is actually the last bit I've noted, putting down to look at, is I don't know if you saw Elon Musk's Falcon Heavy had its 10th successful launch, and the thing that's most impressing me about these launches is the reuse of the rocket boosters. So if you haven't seen the video of them coming back to land, it's the one thing that makes me feel like I'm living in the future. Do you know what I mean? So as a kid, I was promised flying cars and food that would pop up from nowhere, but this really feels on track.
Yeah, that's one. There's two.
These rocket boosters detach themselves from the rocket, and they come back and land vertically from free fall.
Yes, sir.
So, and it looks like science fiction, and really, it's science fact now. 10th launch, successful landings each time. It's now a reliable means of transportation in and out of space, like we haven't had since early era of space exploration. Real innovation, real development, real growth. I think very exciting. And with all the sort of political turmoil that's going on at the moment with elections globally, UK, France, US, there are lots of things I could say about it. One in particular is that for the two most powerful candidates in the world, leaders of the free world as it stands, Biden and Trump, they are both older now than George W. Bush, which was who was president of the United States 20 years ago. So this is the sort of the weird world we're living in now, where to get into the position of power, we've put forward two very, very individuals, senior in their years, and that's the best that we can find, the brightest minds, the most able to take the stresses of running the most powerful nation in the world. It's a very, very weird setup, and so economic policy being decided by the controlling parties behind these individuals is all I can say now. And as as an outflow of that in the last global crisis caused by the pandemic, we saw money printing at a faster rate than we've ever had before, and that hasn't slowed down. We're still seeing an inflow of devaluation of the fiat currencies in our pockets, in every nation's pockets. And so blockchain technology really gives us a way out of that whole mess. And if we can't even get our currency right on the planet, then we probably shouldn't be looking at other planets. This is the reality of it. There are so many things wrong with the way we are using resources on this planet, and the way that we are spreading the wealth and improving quality of life for every human. We really need to get those things sorted, and blockchain is an ideal technology for that. So I'm excited by the Solana ETF that's being proposed, because if we have Bitcoin and Ethereum ETFs, if we can get 1 3rd generation blockchain approved for an ETF, if that's Solana or if it's Cardano, I'll be equally excited. More so for Cardano, realistically, but if we can get those 3rd generation blockchains classified as commodities rather than securities, then that's a huge step forward in adoption by institutional investors, and would really start to bring in the global treasury into decentralized blockchain technology, decentralized currencies, which will be a significant win for blockchain and for humanity as a whole, in my mind. So that's a great bit of news from this week. And the SEC is continuing to lose in battles with blockchain related projects and asset classes. So yeah, things are heading in the right direction. We are seeing them start to reverse their policies. The US government has had to use, previously bringing court cases against Coinbase, has now actually moved their Bitcoin treasuries onto Coinbase itself so that they can sell some. So if the government uses a product, they can't really say it's illegal and really hold a straight face in any kind of forum. So let's hope that has put to bed some of the really aggressive policies against the blockchain industry. So yeah, that's my topics for the day. The rest will all be on Project Catalyst. So yeah, questions now will be great. Dinesh, Utan, sorry.
Jonathan, forgive my ignorance. Could you clarify about this? You mentioned about commodities and securities. What's rate? What differentiate it? Like, is a commodity means it need have utility? I just want to be a bit more clearer on that. Why they distinguish that, and then if you have commodity, then they, SEC approves it. If not, then they won't approve it. What's the distinction between those two, and why as well?
That really is the question that everybody is failing to answer. They arbitrarily decide what's a commodity and what's a security, it seems. In terms of their legal behaviors, they really are determined to class everything as a security, because that is a far more regulated product, in that they will require a whole load more know your customer, anti-money laundering laws to be governing securities than they do for commodities. And so if as an asset you can get yourself classed as a commodity, you are under far more understandable, legible, well-versed regulation than if you are classed as security. And the difference between the two, you probably need to get Lucas' take on, because he will know to a better degree than I would. But yeah, essentially, in terms of digital currencies, commodities are where we want to be, because a commodity like oil or gold is not classed as a security, which means that it's open for trade with less regulated individuals. So if you are looking for assets to put into your pension, you're really restricted to heavily regulated assets. And so that whole financial market will only deal with securities in certain ways, in certain restricted ways, whereas commodities are much more ubiquitous. You can buy and sell them more easily in those traditional commercial economic vehicles like pensions and so on and so forth. So yeah, it's a very good question, and SEC's policies and the cases they're brought against companies casting them as securities when they really don't have any credentials that would make them legally be classified that in the traditional understanding, have been left, right, and center. So yeah, the judges that have come to make decisions ultimately have gone against the SEC in several cases now. So it's hopefully the whole classification and legal standing of these rule sets will shake out over time and become a bit more straightforward. But yeah, it does play into lots of different areas of digital currencies and blockchain activity as well. For example, USDM, going back to that stablecoin, they are taking great measures to ensure that they will get classified correctly and regulated, and they comply with all regulations to be either security or a commodity. And that means that they are restricted in terms of their expansion rate and where they can actually operate. So they're going state by state in the United States to get regulation approved and paperwork in place. And that means it's got a slow growth, but ultimately means that they will be on a firm legal footing by the end of that process. They thought they had an international pathway set out straightforward for UK registered businesses to be able to mint their token, but that in fact has been reversed. The lawyers have now decided that actually the regulations aren't clear enough, so they can't offer minting of USDM to Fluid 7 anymore. So that's now an opportunity off the table for us. So we will have to buy our USDM on the open market rather than be able to add more fiat into the ecosystem. So yeah, it does have a knock-on effect on lots of different areas, us included. So the sooner we can get that sorted out, get the legal frameworks in place, get an understanding of what is and what isn't the security, then it'll let us, just progress, be grown-ups and progress more rapidly with the way that we do business. And that's, it's important for adoption of digital currencies as a whole, and this, the success of crypto in particular. Yeah, I mean,
so digital currency would like to be classified as a commodity, right? So the SEC would approve it. Is that our intention, right?
yes.
Like
So
our intention of wanting to tokens, blockchain would like the currency to be classified as commodities.
yeah, so SEC deals with securities. The CM, yeah, forgot what they are. CMTC. There's another government body that deals with the regulation of commodities, and they are far more sensible, mature, and grown up in the way that they approach regulation. Whereas the SEC is much more about, well, try doing something. If we don't like it, we'll hammer you, rather than just providing you with a legal framework for you to operate in, to be legal from the get-go. So yeah, everybody wants to be classified as a commodity and come under that body rather than under the SEC, which is a shambles.
So one thing I got slightly confused is, like in normal shares, right? Like if like for example, let's say BT, they have shares, right? those shares are regarded as securities, right? But gold and metals, they are regarded as commodities, right?
Hmm.
So, but however, we can get ETF in both sort of like BT shares, so we can buy an ETF. So does the gold as well. So so with the digital currency, because they are regarded as like securities, why they AC want to approve it? And I'm a bit puzzled about that. You know what I mean? Because you can get ETF for any shares, most of the shares, right? Like BT shares or what a big company shares. So like, yeah,
Yeah, again, it's beyond sort of the macroeconomic world that Luke has really got the best answers for.
yeah,
And the nature of the decision making, the lawmaking around it is just it's very deep, very dark, and hard to understand. So yeah, traditional assets they've been around for a lot longer, um, do have clear classification as a security or commodity, and I think that's probably where the issue lies in getting digital currencies classified, or digital currencies regulated and allowed to be sold as exchange traded products. It's probably down to whether they have had a firm classification or not. So really, the only ones that have now are Bitcoin and Ethereum. They are, commodities, um, in terms of their legal standing in the states, and so they now have exchange traded products available. Now, other countries have been behaving very differently. So, we've got an exchange traded product for Cardano available to buy on 6T, Swiss, I think, exchange. So yeah, the rest of the world doesn't have such a problem. The reason that it impacts us so heavily is that the US dollar is the reserve currency. It's the most powerful economic vehicle in the world, and we all, just like all cryptocurrencies that aren't Bitcoin, move in correlation with Bitcoin. You know, all currencies move in correlation with the dollar, and so we need to, when the dollar moves, everything else reacts, and so you know that's what we need to be aware of, and have a legal framework that we understand, so we know when we can actually launch these exchange traded products. um
yeah. This is extraordinary that why, for me, even like a real understanding between, this again for Bitcoin versus Ethereum. I would say they should classify Ethereum as a commodity rather than Bitcoin because with the Ethereum there's utility, right? So you can do all sort of things. While the Bitcoin just like it just there's no
Store of value.
utility, there is tangible utility with it. So in
Mhm.
that sense, Ethereum should be, in my view, maybe with my limited knowledge, I would say Ethereum it would be more commodity rather than Bitcoin. But they approved the Bitcoin as a, like a secure, what, sorry, what, as a SEC approved it. So I'm a bit sort of puzzled about that as well. So maybe I'm not, I need to get my head around on that.
Yeah.
Yeah.
Well, yeah, you'll be one of the legal minds in the world trying to get their head around it, because what does determine the difference? Ever since the creation of digital products, really, the natural, logical way I would look at it is that anything that doesn't have a real world equivalent is probably classed as a security, and everything else, that does have a real world, implement, some matter backing it, should be a commodity. So, oil and gold are very tangible. You can touch them, you can get dirty from touching oil. You can't do that with ADA. So that would be a natural, understandable framework to work to. Everything digital is security, everything physical is a commodity, would make sense. But, uh,
Yeah, it's absolutely
financial business, different
yeah,
different things altogether. So yeah.
yeah.
But yeah, it's interesting. And I'm of the opinion I don't need to understand it. I just need to know what the rules are. Uh, so tell me the rules. That'd be great. But yeah, they can't even do that at the moment. Cool. Um,
Thank-
So any more questions? Any topics you want to cover? Otherwise, we'll start to look at. Hi, Jane. Go for it.
I just looked on the. I sort of need to listen to you talk and then go onto the website and then have a look at stuff to sort of connect the dots. On the Minswap, that's an exchange. You're just swapping coins there, so you need to get money into a wallet, then can connect a wallet. Is that correct?
Yeah. So it's a decentralized app. So you first need to have your tokens in a wallet before you can interact with it. So it will have this. Yeah.
So you can't just put cash straight into that app. You have to do it through a wallet.
Yeah, that's right. Everything needs to go into a wallet first, because that is then in your. Once it's in the wallet, then it's in your custody. You're custodian of it, and then everything else you interact with in DeFi, you're just allowing applications to interact with your holdings on the blockchain. But yeah, you control.
And so I want to try something. So if I get some ADA in there, then I can go and stake it and like get 39% in the ADA SNEC. Do I just randomly pick something or do I need to research? And then wasn't there a USD M or D or something that ADA was making? Is that IUSD? No, wasn't it USDM?
Yeah, that's right, USDM. So that's this token. So they're going through a rebrand at the moment, so it may look a little different to when you last looked at it. So it's this.
I want to.
This M.
Can you zoom in? Okay. Let me just take a screenshot. I'm visual, so I need to.
Yeah.
Words don't do it for me.
And so this pairing of DJED and Moneta, as it's now going to be called, USDM, is the one that I think is healthiest looking. So yeah, there are several factors you need to look at when you are looking to start earning yield in DeFi. The tokens pairs that are being used, whether they are stable, whether they are got high volume, whether they are got some utility, they're not going to just disappear based on because they're meme coins or something. You need to look at the amount of liquidity that's locked into that that pairing, and how much you're going to invest makes up a portion of the pool. So if you're going to put in, say, $100,000 worth of investment into one of these pairings, you'd probably take up, either the whole of or 50% or 25% of the liquidity locked in this exchange, and that means that you're very exposed to other people removing their liquidity and then you being the sole liquidity provider, and that's probably been down to something that's happened in those tokens. Some news about the tokens in the background that you may not have caught up on, and so you have to react very quickly to get your tokens out. And so that's a shady area. USDM and Moneta are much less prone to their sort of behavior, but just in terms of evaluating any of these pairings, look at your proportion, how much you're going to invest, and what proportion that would make of the locked liquidity. So I sort of have a rule that I don't like to hold, certainly never more than 5% of liquidity should be of my assets in any of these pools.
So I'm very good at putting in my big toe first. So I'd probably just do like 1,000 ADA, which is like $500 or something like that. So I'd probably put that in and see how that sort of carries on into a few of them to diversify sort of some risk. And so I just ran. So do you know DJED? Like I haven't heard of that before.
Yeah, so that's an
Or
interesting
JED.
one. Interesting one to look at, remind ourselves of. So JED is another stable coin. So you can redeem one JED for $1. let me get this DApp connector set up, and then we can actually look at some of these apps. So once you've got your ADA into Eternal Wallet, so here's my Eternal Wallet. I've got 188 ADA in here, and I've got it staked to Fluid Pool, which is the first thing you want to do to earn yield in DeFi. So staking is completely safe. You don't risk your ADA at all. So that's the first thing to look at, and you'll get about 3.5%, 3.2, 3.5% APR growth of the ADA in your wallet, and that will happen self-compounding automatically. So that's the first thing to do, is just get yourself staked to a pool. And of course, I would recommend Fluid Pool, because that's the one that I manage. And then if you want to look at higher yield opportunities, you would start to learn about connecting to DeFi applications. So this is from the wallet. This is the button here that controls which wallet, because you can have multiple wallets in this list here. And then you would choose the wallet that you want. So I'm going to take my staked ADA wallet. I'm going to hit the plug icon, and now that's gone green. So I know that that can now interact with a decentralized application. So then in the same browser, when I go to a DApp like Minswap, I get this connect wallet button, and I can click that, select the wallet I'm using, which is Eternal Wallet in this case, and that will pop up a little prompt asking me for some permission. So in this case, it's asking me permission just to connect to that app, that DApp, so decentralized application. And we're going to be doing that via the DApp connector. So if I grant access, then it will allow this DApp to read the balance and prompt me to sign transactions using my Eternal Wallet. So I still have to ultimately sign a transaction. You'll be able to review a transaction before signing. But at this stage, you just want to be able to grant access to read the balance. So once I grant access, then now Minswap can read the balance of my Eternal Wallet. So it knows I've got 183 ADA in my wallet, and it can see the other tokens in that wallet. Now, this is filtered by default because I've connected my wallet to show only so I'm on this earn farm page, and it's defaulting to only show me staked only assets. So I'm going to take that off so that we can actually see all the ones available because I haven't joined any yet with this wallet. And there we can see DJED USDM, which is the pairing that from my due diligence, my evaluation, I'd be willing to put money into. So I'd maybe then say, okay, let's take my $500 worth of ADA and convert it into DJED and into USDM so that I can participate in this yield opportunity. So that's my ultimate goal, is to get that 29%. Yes, Jane.
So I would I can put fiat into my wallet because I got another wallet, Yuri. And so I can get a credit card straight into that wallet. So then I would go on to this platform here, the Minswap, and then I would trade ADA for DJED. Is that correct? And then I would put it into that middle one there.
Yeah, that's our ultimate goal. So we need to get hold of some DJED and some USDM before we can participate in this pool. So
you have to get both. Okay.
Yeah.
Okay.
So there's a few ways.
So I'm on my own thing here, and there's in trade. So I'd have to get ADA, and I could say get 1,000, and then I put 500 in DJED and 500 in DSM. Does it say it has to be the same amount somewhere?
So it'll be a 50% portion of either into here. And there's a couple of ways.
Does that apply? Sorry, does that apply for all of them?
It does, yeah. On this site, I think all of the pools are 50% each for the pairings, and there are such things as larger pool, so you could have 3 tokens in it, but none of that is really active in Cardano yet that I've seen. So yeah, 50% pools are pretty much what everybody does, and yeah, the way that you do it, you make sure that you've got those 50% is to use this user interface to do it. So what we are actually doing is providing liquidity in these pools, and it's got this this feature Zap. And so Zap is the easiest way to get hold of the tokens that you need and get them in. So here we can say from this liquidity Zap, it's showing my ADA balance here, and I can say I want to take that ADA balance or a portion of it, and I want to get involved in the USDM. Yeah, so you can't zap into DJED USDM, but you could zap into ADA USDM. So if you want to do the DJED USDM one, you actually have to individually buy DJED first and individually buy USDM. So you can't use that zap feature. So instead, let's go to the trade tab. Got our ADA balance there, and then we can select the token we want to get hold of. So USDM, it's straightforward. So here we could say so let's say I was doing 100. 100 I want to put into this pool altogether. So I'm going to take 50 ADA and buy some USDM. So that would give me 19 USDM. And you know what? I might actually do this for you. It cost me some fees, but you can see it in process. We've got some time today, so let's do a full-on practical workshop. So here it's telling me I'm spending 50 ADA. I'm going to be buying 19.19 USDM. So that's effectively $19. These figures are talking about how the price can change when I'm carrying out this swap. So start to learn these and immerse yourself in what these mean is something that I think you just let happen over time. But certainly try and read them each time. Each time you come back to read it, you'll gain a little bit more knowledge. So here we've got the minimum I can receive is 19.10145 USDM.
Sorry, Jonathan, I don't know if you've explained it before, but could you then maybe just explain slippage tolerance? Because that seems quite, is that quite high? Is that 0.5%? It's not 50%, right? Okay, so maybe you could just explain what that means.
Yeah, so the minimum we can receive is this figure here. And what they're guessing we're going to get is this much. So we're hoping to get this. If things start to slip, then it might drop to this much. And so what you can, and if you think about it, when you put your ADA into the swap, the price of dollars against ADA is at a certain point. If someone buys at the same time as you, someone's putting in an order for 1 million ADA to buy dollars, then that's going to change the price ratio, the price relationship between ADA and dollars significantly. Because if you buy 1 million of anything, then the price goes, the price is impacted because when you're buying that much, there's a high demand for that product. And so the first thing that when there's a high demand for any product is they put the price up. So you go and buy $1 million worth of eggs, the price of eggs will rise for the next person. So you'll get that purchase at the same point at that price that you're buying it at. But the next person that comes along will say, well, sorry, we've sold all our eggs and they're more rare. So you've got to go and pay a bit more to get the next lot of eggs. So that's that's what we're talking about here. The slippage is the price movement that happens while you're placing your order. The one that lands just before yours, has that impacted the price of the token?
Thank you.
So we can set the tolerance on that. What we're happy to let slip, how far we're willing to let that price slip to make sure our order goes through. So if we say 0 slippage, we want it at the price you've listed it at, then it will only go through if nobody else is placing orders at the same time. And so the chances are that most of your orders will actually fail if you've got zero slippage. So you can set a tolerance of how far you're willing to let it slip. And if you're really keen to get into a token, then you could put your slippage up to 10%, say. But sort of typical figures are between 0.5% and 3% is sort of maximum slippage, and that's that's at your discretion. So the way you edit that in here is under these options there. So here we can set 0.1%, which is you're not going to tolerate any kind of slippage. If it's looking like the price has moved more than 0.1% from the price you were quoted, then you don't want that order to go through, and so the app won't put your order through. If you say I'm willing to let it slide by 0.5% or 1%, then you're willing to let the price really move a bit further, and just to make sure that your order goes through. So if there's a token that's in high demand, say you're going shopping for Nike and everybody's buying and the price is rocketing and you're a trader, you might put in a slippage tolerance. I'm buying $1,000 worth. I'm happy for the price to slide $100. So that's 10%. So I might pay $110 for $100 worth of Nike. And so you could put your slippage tolerance up to 10%. But this is where you are. You know what you're doing. You're confident that this token is at least going to earn you that 10% in growth if you're a trader, or long term it's going to beat that slippage. But yeah, otherwise the default of 0.5% is quite reasonable. And so yeah, let's leave it at that. So here we're reading that's the price that it could slip to. So I'll only actually get $19.1 rather than nearly 19.2. But that's all right for me. And so the price impact is the difference between the market price and your price due to the size of the trade. So obviously, if you're putting in a great big trade, and that's going to impact the price heavily for the next person. If you're putting small trades, then you can have lots going in at once and not impacting the price too much.
And how about it says batch fee? Want a discount?
Yeah.
What happens when you click on that?
Yeah, so then you've got fees, which are always charged. So these are using the platform. So there's a liquidity provider fee. So the liquidity provider fee is what is used to pay people who are providing liquidity. So that's our ultimate goal, is that we're going to provide liquidity in DJED and USDM. So when we are earning fees from providing liquidity, this is the portion of a trade that will come towards you as a liquidity provider. So that's a good figure to pay attention to. So it's at 0.25 goes to liquidity providers. So that's you in the future, and 0.05 goes to min stakers. So if you hold the min token and you're staking it on the platform, because a min token is owned by the Minswap platform itself, then that's what you're going to fee. Then you've got sort of fees for actually doing the business of the swaps, running the infrastructure, etc., etc. And so Minswap's batcher fee is a fixed fee of 2 ADA. Now, because I hold some min token and I'm using the min platform, they give me a bit of a discount. So because I'm holding, I don't know, a few hundred min tokens, I get a discount of 0.01 ADA on that batcher fee. And so if you want to be doing trading on Minswap regularly, then you might find, well, what will give me that full discount of 2 ADA, so I don't pay the batch fee anymore, and that's how many min tokens you might hold, just to save you a bit of fees every time you're transacting or swapping on Minswap. And so yeah, you can buy some mint tokens or earn them as well. And then you've got a deposit, which is actually part of the protocol requirements as well. Anytime you're doing a swap, you need to provide a portion of ADA to let that that swap go through. And it's the same as if you're minting tokens or sending between wallets. There's always a fee or a or some kind of charge involved. In this case, this is a deposit that's required. So if I was sending an NFT from me to Utan, then that is a type of transaction that requires a deposit to go with it. So if I'm sending an NFT, which is a Hungry Cow NFT, I'm sending it to Utan, I would have to actually send him to ADA as well. And that ADA will stay in Utan's wallet unless Utan sends that to ADA back to me in and of its own right. And so in this instance, we're just interacting with a smart contract. So we're going to send our deposit of 2 ADA into the smart contract. And so it's bundling up the transaction. It's looking at the parties involved, which is my wallet and the smart contract wallet. And so it's saying, yeah, for this transaction to go through, we need a deposit of 2 ADA. So I'm actually having to send 2 ADA into this. Now it's a deposit in this sense with that smart contract, because the smart contract will give me that 2 ADA back automatically when the swap has finished, completed, or failed. So that is a deposit in that I get the 2 ADA back again. And the route we're going through is just a swap between ADA to USDM. So I'm going to buy 19 USDM.
And sorry, the batches fee, want a discount, that's when you buy min tokens and you get a discount through that. Is that what you were talking about?
Yeah, so if I was buying, first off, if I was buying min tokens, so I actually own 490 min tokens, and that's got me a discount on the batcher fee of 0.01 ADA. So if I multiply by 100, so I was holding 400,000, 490.
That's sort of like one of those tricks. I think if you own the exchange's token, they start to give you little discounts, right?
Yeah. So everybody's trying to grow liquidity, to increase liquidity in their token, because that gives it stability. It means that swapping is more level, more even. They want to stay around for a long time. So they're willing to reward people for buying and holding their token. So if they can encourage people to buy and hold their token by giving them a discount on the fees, that batcher fee, then that's something they're gonna do, because it's not costing them anything really. They can earn this batcher fee, or they can have more people holding their token, which will increase its value anyway. So it's like a loyalty token almost, or a loyalty reward for participating in. If you always buy your groceries from Tesco's, then Tesco's will offer you a loyalty discount or actual cash back every now and then, or vouchers to buy cheap washing powder 1 month. It's this sort of scenario. So it's just commerce, capitalism repeats itself in different guises. It will do in DeFi like it does do in our TradFi world.
And so this exchange is pretty stable and recommended at the moment.
Yeah. So Minswap is second oldest exchange on Cardano. We're better off looking. So yeah, perfect question. You need to do due diligence on the platform, on the tokens, on everything. So one way to do due diligence on the platform, the application that you're looking at, is to see, particularly with DEXs, decentralized exchanges, you can figure out how much liquidity has been put onto those smart contracts, which is an indicator of how much people trust those smart contracts. And so if we look on here for no, we don't want stablecoins. We want to look at DEXs. How do I filter? Well, let's filter by chain. So with just looking at Cardano. Oh, I thought that. Just looking at Cardano blockchain. So DeFi Llama is a third-party independent aggregator of data from multiple blockchains.
Sorry, Jonathan, just a question. You are recording, eh?
Yes, I did start recording. Yeah,
Okay, and then and you'll be sharing all the links again, hey?
yeah, links go onto Discord.
Discord, okay, great. Thank
video
you.
will be on
There's a lot. There's a lot from today. This is going to take a while to try and onboard myself. Thank you.
Yeah, no problem. So here we've got a list of the exchanges, this decentralized exchanges on the Cardano blockchain, listed in order of total volume locked. So how many dollars equivalent of cryptocurrencies have been locked into the smart contracts run by these protocols. So Minswap is the largest decentralized exchange on Cardano, and it has $56 million worth of liquidity locked up in its smart contracts. So that, as an indicator, is that $56 million, that's a decent sized exchange in anybody's books. So you'll be, your $1,000 will be floating in a pool of 56 million, which makes you feel that much more confident. You're not the pioneer, the lone person plowing money into a platform that's got no liquidity. So yeah, good question. And a great thing to do. And so that stick DeFiLlama.com into your tool set and start to slowly grow your understanding of that platform as well. And because it's not related to Cardano, it's not related to any protocol, it's just as an aggregator of data from across multiple ones. So yeah, fairly independent. Hopefully doesn't have an agenda to push one set of data over another. So back to Minswap. So we've looked at the amount of volume locked into this platform as a whole, into Minswap as a whole. One thing to look at certainly is how much liquidity is within that pool that we're trying to get into. And it's kind of tricky to find that out until later in the stages, but let's carry on through it. So let's buy some USDM. I'm going to buy 50 ADA of USDM and confirm that swap. It's going to pop up the Eternal Wallet transaction description page, which is another important thing to start to try and get your head around. So it's asking for me to sign that transaction. And then we can, down below, it's describing exactly what you are signing to, what you're agreeing to. So it's got a red figure, which means it's something leaving your wallet. So it's got a minus sign. So I'm sending 54.19 ADA out of my wallet. As portion of that is the fee, which is 0.19. That's going to the blockchain itself. So that's not coming back to me. And then further down, it's actually broken down how transactions are built and work on the Cardano blockchain. And yeah, you do have to have a decent level of technical understanding to grasp it. Again, it's something about learning by immersion. Over time, you'll grasp it. You don't need to worry about it too much, as long as you get your head around these initial top figures. How much has got a minus sign next to it. You want to make sure that it hasn't, surreptitiously added in minus 50,000 AGIX tokens or something in here, because you're only trying to swap ADA to get hold of some USDM. So make sure you do look at this top piece here, and it's just got in it what you're expecting to see. And if you do see something that you don't understand and you're uncomfortable about, there is an extra minus sign and a figure of some other token here, then don't sign it. You're safe until you sign. So far better to be cautious. Come and ask a question in Discord, and before you sign a transaction you don't know, you don't understand. Yeah, for now I'm confident in this. I'm going to be sending 54 ADA out, which is 50 ADA of a USDM I'm buying, minus a batcher fee, minus a transaction fee, accounting for slippage, so on and so forth. So I'm going to sign this now. I'm going to use my Bitwarden password safe, which is crucial. Make sure you have a digital password safe that is holding the spending passphrases for your wallets. And that password is really strong, really secure. You can make it 20 characters long if you want, including question marks and hashes. So it can never be guessed or by a computer or a human. And use that as your spending passphrase. And so you really need a wallet, a password safe to be able to store those passwords and use them. And they need to be accessible. So digital password safe is what I recommend. And Bitwarden has a perfect track record. It's a great tool to be using for various other reasons that I've gone into in other calls. But yeah, let me type as well as talk for a second, which I'm not great at. So I'm looking at staked ADA. Finding the spending passphrase for that wallet. I need to spell again. And I'm going to sign this transaction now, which means I'm sending my 50. Oh, I got the wrong password. Which wallet am I on? Stake data. That should have been right. One more time. There we go. So I'm sending 50 ADA into a smart contract. And that contract is being commissioned with finding me $19 worth of USDM tokens. And I'm going to want it to send that back to me. So we can see now my balance of ADA has dropped from 183 to 129. We can jump over to our Eternal wallet, look in the transactions list, and you can see the transaction we've just posted. So I just signed this one, which was sending, sorry, this second one here, which was sending 54 ADA to Minswap. And then look, there's another transaction after it already. So it's working, old ones are at the bottom of this list, new ones at the top. And so this second transaction is already processed, which is really rapid. And it's actually plus 19 USDM into my wallet. It's also given me back my ADA deposit of 2 ADA. So I've received 19 USDM and 2 ADA. So if I want to see those tokens in my wallet itself, rather than just in that transaction, I can come over to account, token list. I can filter for USDM. And there we have the $19 worth of USDM sitting in my wallet, which is great, exactly what we wanted to happen. And I got my 19.19 rather than it didn't slip to 19.10. So that was a good trade. Next step is to get hold of some DJED tokens. So quick intro to DJED as part of your due diligence. So USDM, fiat-backed stablecoin, $1 in the bank to $1 on chain. DJED is different beast altogether. DJED is an algorithmic stablecoin, so it's got multiple digital currencies backing one, making you able to redeem one DJED for $1 worth of ADA at any point in time. So this is the DJED platform. The code behind the DJED platform is designed and developed by Input Output Global IOG, who created Cardano. So, they've got the top-notch development team. They handed their code over to and commissioned brain fade, Coty, the Coty team, which is an Israeli-based development house. They have their own blockchain, Coty blockchain, and they work in a fully regulated industry. Everything they do is compliant with global legislation in whichever jurisdiction it's operating in. They've got a high reputation for interacting with businesses and enterprises. And so they were commissioned to actually create the DJED stablecoin, which is a complex, over-collateralized digital-based stablecoin. The intention of the stablecoin is to peg its price to the current reserve token, which is the US dollar. So you'll be able to redeem 1 JED for $1 in other tokens. So behind the JED ecosystem, you've got a reserve coin, Shen. You've also got ADA, and then there are also bless you.
Sorry.
There's also some Chainlink Oracle interactions with bank accounts and wallets and so on and so forth that's providing stability with this coin. And so essentially understanding JED is quite tricky, but if you bear in mind that for people to be able to create 1 JED dollar coin, they need to put in between 4 and 8 times collateral. So 400 and 800% collateral. So if I'm minting 10 JED, then I had to put up between 400 sorry, not 400, 40 and $80 worth of cryptocurrencies. So that will be held in the treasury. And so at any point in time, those between $40 and $80 worth of alternative currencies can be sold to make sure that we can buy 1 fiat dollars worth to give back to me. Doesn't quite work like that, but that's the idea. That it's over collateralized between 400 and 800%. And it's the value of the tokens backing it and everything are monitored and matched. And there are rules set around in smart contracts, all on chain, all untamperable, that determine that you'll always have more collateral available to than you will have more Shen, more ADA, to make sure that you can redeem $1 worth of JED at any point in time. And so,
So is 1 JED equal to 1 USD? Is that what you're saying?
yes.
So what happens if the value of the USD is going down? Does that mean the value of the JED is going down?
Yes, 100%. Same as with USDM. So it's pegged to the dollar. So you're not investing in cryptocurrencies, alternative currencies. You're actually investing in you're basing your value store against the reserve currency, which is the dollar. So yeah, you're not looking to grow your holdings in terms of winning against the dollar. You're actually expecting the dollar to do reasonably well or to stay stable enough to keep you happy. But bearing in mind that the ultimate goal of this is to create a stable income or stable investment growth vehicle. And so we're looking to earn 30% yield on top of the dollar by pairing $2 stable coins together. And 30%, having 30% more dollars at the end of the year by doing all this is a good return on investment compared to putting it into a bank. Go on, Jane.
So yeah, so if 1 JED is 1 USD, but I have to put 40 USD in there to get 1 JED, am I staking or am I mining or am I farming?
So it's a great question. So what you described is if you were providing liquidity to JED itself, to the JED ecosystem, but you're not.
So that's staking.
And that's kind of staking, you're providing liquidity elsewhere, but you're not interacting with that portion of JED. You're just using JED to earn elsewhere. So you're just going to buy the JED, pay $1, get 1 JED. So you don't really need to worry about that. This is just, I'm just talking about all this as part of your due diligence on the stablecoin
okay.
itself.
So I give them $1 and they give me 1 JED, and then they're doing all this other stuff behind, which is good.
Yeah. So this is giving you
I was
confidence.
a bit worried I was a bit worried I had to put $40 in and then I'd get 1 JED.
Yeah, no. We're just
Okay.
we're on the retail side of things. I'm just describing the background workings of the JED ecosystem as part of your due diligence. So yeah, we're happy with JED as a platform to be using their stablecoin. We're happy with USDM. So now it's just getting hold of some JED tokens. So on
So I would have to go onto this platform to get the JED, or I could do it on the Minswap.
I think we can do it on Minswap. So just like we just bought some USDM, I'm now going to try and buy some JED tokens. There we go.
Yeah, I'm trying to keep it simple. One place, do my shopping.
Yeah, certainly helps to start with. Don't shop around, just stay in the big box supermarket and know you're getting a reasonable price. So 50 ADA for $19.39 worth of JED. So that's where you're seeing JED is pegged to the dollar slightly differently to USDM. They're not quite in the same peg, but they both are trying to stay $1. So we can say the minimum receive is 19.29 JED. Same deal as with buying USDM. I'm giving over 50 ADA and getting some JED tokens. Slippage, liquidity provider fee, batcher fee, deposit, all the same. So it's popped up the prompt again. Let's just check. Quick sanity check. Yeah, it's extracting 54 ADA from my wallet. That's the fee. There's no other minuses, negatives. I can sign that happily. It's going into the same sort of smart contract. This one will be returning JED to my wallet rather than returning USDM. So let's quickly jump over to Eternal Wallet, see if we can actually see it happening this time. So this is the transaction we've just signed. It's in pending still. It's Minswap, and that's now on chain, which means that the transaction we just signed has been included into a block on the blockchain, which was carried out by one of the stake pools. So Fluid Pool could potentially have minted that block, writing your transaction into immortality. If I do a refresh, it's shown as after we put in our 54 ADA just now, it's also returned us 19.39 JED. So again, no slippage there. We managed to get hold of $19 worth of JED and $19 worth of USDM. Again, you can just verify. Just verify in your token list account. Token list. Have a quick look for JED. There we go, $19 worth of JED. Cool. So now we are set up with, we can actually go into Minswap. Oops. And the first place we'll visit is Liquidity. And we're going to add liquidity. So we're going to add liquidity to the no, I've done it wrong, sorry. Wait, no, I think it's here. So these are the ones I'm already doing. I want to add liquidity by taking JED. As one of the tokens, as the first token. And I will take USDM as a second token. And let's give me a bit more information. You're using a pair of stable swap. Please use the stable swap services for a better service. Okay, interesting. So actually they've got a different user interface for doing JED USDM. So that looks like it would have worked, but instead let's go via this method. So we're selecting the pool first. We've got a few stable swap pools. JED IUSD. IUSD is a synthetic stablecoin, a bit like JED in terms of it's backed by cryptocurrencies. And we've got this one USDC, which is Circle on Cardano. So that's been bridged over at some point from Ethereum. But we're going with JED USDM, which we know has got that 30% yield on it. It's put up my balance of JED and the balance of USDM as it is available in my wallet. So let's say maximum liquidity. And just by clicking the balance, take all the JED or all the SDM. I've got more JED than I do USDM. So let's is that the wrong way around? Yeah, so it's going to take wait, I'm not understanding this right. So 19.39 token 1 and only 15.28 token 2. Let's try this max. So there is some disparity between these two stable coins in terms of the ratio in the pool. So I haven't done this before with stable swap. So actually, you could force it 50-50, but if you don't do a custom ratio, then actually there is a slightly different ratio between DJED and USDM. So I can only imagine that's down to DJED not maintaining its peg quite as well as USDM, or vice versa. And so they've got slightly different portions of those stable coins in that pool. That doesn't matter to you because you're looking to earn on the trading fees and the yield of 30% on the balance on it. So ultimately you're going to have your $19 plus $15 in that pool, earning you yield. And so whatever the balance is, the proportion of those tokens may change over time while they're in the pools, but you're going to be able to get them back out. And in the meantime, you'll have earned that 30%. So let's just leave the custom ratio off, go for the ones that they're suggesting. I'm going to hit that. And that will give me 19.39 DJED liquidity pool tokens and 15.28 USDM liquidity pool tokens in a pair.
Sorry, Jonathan. I thought you need to be 50-50 all the time. Because if you don't have 50-50, then there's a chance of that's what Luca mentioned last time when doing full. If there's no 50-50 ratio, then there's a chance of disparity in the future.
Yeah, well, we were talking about that a bit earlier as well, is that you can have different portions. There's just not many places that do it. So the one other place on Cardano that I know does it is on I think it was on Spectrum. I don't know, but there's another exchange anyway that did do a different portion of assets within a liquidity pool. But there's nothing stopping you doing different portion of assets in the liquidity pool. And in fact, when you are putting your tokens in, so you may put 50-50 in, and so the role of that smart contract then is to maintain whatever portion it's given in, maintain that over time so that you can get it back out again. So when one token rises in value, it will sell some of that token to buy more of the cheaper token to bring the pair ratio back down again. And so it's always trying to maintain that initial ratio of the token pairing in that pool. And that's the way that the smart contract will work while you're earning yield. And so there's nothing stopping those.
Sorry, Jonathan. Wouldn't it be, if you do that, wouldn't be chance of impermanent loss, more prone to impermanent loss, because one coin may be like a cheaper rate, over time it may reduce the value, then impermanent loss could be higher, wouldn't it?
Depends. It depends on which token is in which half of the pairing. So if you think about it, you could pair, and also impermanent loss is always relative to your frame of reference. So if I put in $100 worth of USDM stablecoin, I know I can redeem that for $100 worth of fiat anytime I want. But the other half of that pairing, I put in Nike meme token. Now, my expectation is that the meme token is going to rise in value at a crazy rate compared to US dollars, because that's the way meme tokens work. And so you're offering to provide liquidity for a meme coin and a stable coin. So you know going in that there is going to have to be some selling between one of those tokens to pay for the other, and vice versa, to maintain the ratio going in. But if your ultimate goal is that I don't mind selling, like as the meme token rises in value. So if I put in $100 worth of Nike, if the value of Nike rises, which I expect it to, if that liquidity pool is just selling Nike to buy more dollars, to keep that ratio the same, then actually, personally, my perspective is Nike is a really risky token. So I don't mind if it's selling some of those because it's risen in value to buy more dollars, because ultimately I know I can buy groceries with dollars. I can't buy groceries with Nike. And so I don't mind losing some of my speculative investment portfolio to get more stablecoin. So, that's my behavior over time anyway. So if my long-term position is I want to hold more ADA. So might be willing to take Nike, which is a risky asset, pair it with ADA, knowing that if Nike does go up in value, it will sell the Nike to buy more ADA, which is my long-term goal anyway. So this is it's all down to the investor, the psychology they want. And so if you are doing different proportions in that pool, so maybe I'll put in $20 worth of ADA and $100 worth of Nike, then the rate of growth of my ADA, if Nike rises in value, will be less than Nike. So I'm holding more Nike, I'm losing less over time. I'm glad because it's rocket shipping, and so that might be something you want to do. And so you don't often see you being able to custom control that ratio, but there's no reason for it not to be your under your control. It just depends on the DApp you're using. An impermanent loss.
So is that what impermanent loss means? That you don't get the percentage of one of the coins out that you put in? Is that what it means?
Exactly.
So you don't get the benefits of the increase in price if it's a meme coin. You get this, it's the number of coins and not the overall value in the market.
Yeah. And so
that's what they call impermanent loss. Is that right?
that's right, yeah. And it's called impermanent loss because it's only a loss when you realize it. So while the pool is going on, you've got your token pairs in there. Those those rations can change over time. And so if your meme coin loses all its value, everyone's fallen out of favor with it. Nobody likes Nike anymore. We're now moved on to Gonad. Then your token, it will sell all your ADA to buy more meme coin. But you know that when you come to sell your meme coin, it's worthless. Nobody's interested in Nike anymore. And so actually, when you do realize, okay, I want my ADA back out, at least I need to move it into another investment or need to go and buy groceries, then you sell, and then your loss becomes permanent if you're in a loss position. If, however, in the meantime, ADA is increased in value and Nike is increased in value, then you've got impermanent gain. So until then, you sell out of that liquidity pool, get your ADA back and your Nike back, then suddenly you're in permanent gain. And so you can suffer from impermanent loss, or you can win from impermanent gain. Do you know what I mean? Both are outcomes from this provision. And it's impermanent because nothing happens until you sell, and then you either make it a loss or a gain. But yeah, the risk of impermanent loss is that you'll end up selling your more valuable token for a meme, for a less valuable one that's dropped in value. So if you put in $100 going in, then you might only get back $50, $20 at the end of the whole thing. But again, you've got to offset that against the yield that you've been earning in the meantime. Because if you put in $100 and you're earning 30%, and actually you've had it in there for 5 years, and the $100 you put in is actually only worth $90 at the end of it, but in the meantime, every year you've earned 30% on top of your $100, then you're still coming out in a win, even if the impermanent loss has reduced you. So your yield, you're offsetting that against your price appreciation, depreciation of the tokens involved. So it's a complex set of factors to play into, and all these factors, do require you to do some thinking about it. But yeah, does that answer questions, thoughts, Rotan, Jane?
Yeah, that's a beautiful word. I'm gonna do some art about that. And so if you're doing these things, it's probably better to get two coins like stable coins, or a stable coin and ADA, or so start with some coins that don't have a lot of volatility, unless you want lots of ADA, or you expect the ADA to go up in value. And so when you get that ADA, the number going up, because you're staking the number of coins, not the value of the coins, correct?
Yeah, correct.
And so what you get out is the number of coins, and whatever value it is on that day makes it exciting or not exciting.
Yes, although so you're within those pairings, then it will buy and sell some of those tokens to adjust for price movements. So you might not get out. So if you put in a so here we're putting in 19 USDM, 19 JED. If they were more volatile tokens and not stable coins, then I might only get out 15 JED and 22 USDM, or vice versa. We might get out 15 USDM and 24 JED.
So
the actual number.
So you get out the value then, not the number of coins plus 30%.
Sort of, yeah, sort of. So because there's so many factors that can change, so the value they put in, so say it's $19 of each, if both those tokens have dropped in time, then you might get out just $19 worth of either of those tokens, but both tokens have devalued in that time anyway. So in terms of value, what you're getting out is less than you put in. So that's then your impermanent loss. You've made a loss. Does that make sense? I mean, there's so many factors at play.
So staking is not based on the amount of coins. It's based on the fluctuations of the currencies during the time that you leave it staked. So like, I don't know, I put $100 in the bank and I get 30% back after a year, so I get $130 back. But in this case, it's not the same. You might get 30%, but because the value of the dollar went down, you only get $70 back after you've staked for a year. That doesn't seem fair.
Well, you're looking at you're mixing two different investment approaches. So staking is one thing, and what we are doing is liquidity provision or yield farming. So staking in Cardano land is really safe, really stable. If you put in 100 ADA you stake 100 ADA, you're going to get back 100 ADA at the end of it, plus staking rewards. So you're never risking your capital with staking. So you put in 4,000 ADA, stake it with Fluid Pool. A year later, you'll have 3.2% more of ADA at the end of it. So you'll have more than 4,000. You'll have 4,003, 4,030 in a year's time. With liquidity provision and yield farming, you are taking your ADA and you're putting it into more risky investment strategies with potentially higher yield. And so what I'm talking about is trying to find a way to earn a higher yield. So, 30% rather than 3%. But you are risking your capital a little bit So we're trying to lower the risk on our capital. So we might get back 4,000 ADA, we might not, ultimately. But we want a higher yield, which will offset any risk to the capital itself. And so it's a different strategy, just like if you were going to.
And I just just looked back and I realized we're in the farming section with 2 coins rather than the staking section with 1 coin. Is that right?
Correct. Yes. Yes.
That's what farming is. Okay.
Yeah. Yeah. So it's slightly different technique, strategy, with more risk, but more reward. And again, just another thing to add into your portfolio. So that didn't work because we left it open too long. But yeah, let's just do this last step of putting this liquidity into the actual yield farm. We'll have to refresh. So,
Okay. But no, sorry,
so we're on
it takes
liquidity, add liquidity, and then we're going to stable swap liquidity. And I'm going to grab DJED USDM. I'm going to take all the DJED I can, and it's going to pair it with 15 USDM. Add liquidity. I mean, in a stable swap in particular, it doesn't really matter which one you get back, because you're going to, how much of, if I get 15 DJED back, I'm going to redeem it for 15 US dollars. If I get 19 USDM back, I'm going to redeem that for 19 US dollars. Either way, you're ending up with $1. So the ratios OTAN don't matter so much with a stable coin pairing. So I need my spending passphrase. Let's look at the transaction details again. So I'm sending 19 DJED out of my wallet, along with 15 USDM, along with 4 ADA. So this is all leaving my wallet and going into the smart contract. I'm going to sign it. And that transaction is now placed as an order. I'm waiting for this to be filled. Oh, it's already been fulfilled. Let's jump to our internal wallet. Quick look. Transactions. So we haven't had the liquidity tokens back yet, but there we go. Well, there's the ADA, the DJED, and the USDM leaving the wallet. And we're now waiting for, so we've sent that into the smart contract. The smart contract will now send us back liquidity pool tokens. So these are tokens, new tokens that represent our portion of the liquidity that we're provided. So that's it, they just come back. So we've been given 34.5 million DJED USDM SLP tokens. So stable liquidity pool, I think that SLP stands for. Plus we got our 2 ADA back as well from that 4 we gave them earlier. So now those LP tokens are actually sitting in our wallet. DJED USDM SLP. And that means we are now a liquidity provider. We've given some DJED and USDM over to Minswap contracts. They are using that to carry out swaps. So just like we bought USDM and we bought DJED, now whenever anybody else swaps DJED for USDM on the Minswap platform, those people will be charged a fee, just like we were charged a fee. But now that liquidity pool, liquidity provider fee that we saw on the transaction description, that 0.25% that fee, portion of that will be going to everybody who's providing liquidity, of which we are now one. So we'll be earning liquidity pool provider fees from every transaction that happens on Minswap in that stable swap pairing. So if we go back to Minswap now, go to liquidity and see under your liquidity, we can see there we've got DJED USDM and that's equated to 34.5 million LP tokens, SLP tokens, and we are earning fees for that. However, we're not earning yield yet. So we've got our fees that we can earn, and then if we want to maximize our return from providing liquidity, we can go over to our earn section and start farming as well. So we're holding at the moment, we're holding those LP tokens in our wallet, which means that we're providing liquidity, we're earning liquidity provider fees, but that's all we're earning. And that might be like 1% one day, it might be 5% the next day, but that's the fees that we're earning, portion of those fees we're earning. If we want to maximize our return, then we need to send those LP tokens back out of our wallets again. So they're no longer in our custody. We're sending them into the smart contract, and they will sit then on the Minswap platform, smart contracts, and we can earn yield on top of our trading fees then as well. So under earn, that's sort by, it's filtered for USDM. And now finally, and again, this is where vocabulary is everything, and I really don't like the way they call it staking here. But now we're going to take our LP tokens that are in our wallet that represents our portion of the liquidity pool, our LP tokens, we're going to stake them back into the platform, which is actually putting them into the yield farm. And we will then earn additional yield, which will take us up to that 30% APR. So we're going to put 100% of the LP tokens that we're holding, which is 34.5 million. We're going to stake those. It's failed. Need to probably do another refresh. Refresh the browser window. I'm going to go to USDM. We're going to stake 100% of our LP tokens. Signing will now work. Let's look at the transaction again. We've got our we've got minus 1.9 ADA leaving the wallet. We've got 34.5 million LP tokens leaving the wallet. That's what we're expecting. And then there's a fee to the chain as ever. Sign that transaction. So now those LP tokens will leave Eternal Wallet. Look at transactions. Outbound, those LP tokens have left our wallet. If we looked in the token list, tried to find them, they're no longer in our wallet. So they're no longer in our custody. So we can't control them anymore. All we can do is sign transactions related to them. But the smart contract that we've sent them into, Minswap smart contract, now has those tokens. And as a result of us doing that, they're willing to give us yield. So if we now change this filter to be staked only, it'll see all the liquidity pools we're in. So we can now see under this drop down, as we earn this 30%, 29.68%, we will see min tokens being sent to us or being accrued for us, and ADA. So the 30% that we're earning is going to be made up from min and ADA. So every, like I'd set up a routine, I determine how much is in that liquidity pool. Say I'd put in $5,000 worth every, if it's earning 30%, then every 5 days I might go in and harvest the rewards, because that could be $30 in the bank or something like that. I'll harvest them, and then I can decide with that harvest what I want to do. If I'm looking at a cash flow strategy, and all this is strategies that I've learned from IAW, the International Academy of Wealth, that is a membership-based investment club that several of us are part of. If you're looking for a cash flow strategy, which they educate about, then you're looking for a return on your investment that can yield results. And so this is a strategy, a cash flow strategy that's giving you a return on top of your capital that you can then either put into other investments or spend it if you need to. But it's a cash flow strategy. If you were looking at a capital growth strategy, then you might just look at pure native staking on Cardano. So you put your $5,000 in, you're getting 3% APR on it. And that's a growth strategy. This is much more of a cash flow strategy where you're earning 30%, which is much higher rate of return. And that return is useful, regularly. So, several times a month, it's worth harvesting that and putting it into a different strategy, moving it about. Bearing in mind that this strategy may fail, this USDM DJED pairing may fail. Maybe there'll be a technological collapse in one of the projects backing it, and the value of that token will drop. And so your impermanent loss will then become significant. And by the time you get your tokens out, they could be worth less than you put in. So you've got to factor in the risk there and what you might lose out, and offset that against the yield, the 30% yield that you're trying to achieve. This yield figure is variable as well. So, it's earning 30% now, but if factors change in projects, in the Minswap protocol, in the amount of people providing liquidity, then that can change. The amount of people trading this pair might change, and so that 30% might drop to 2% APR, and then suddenly it's not worth you risking the impermanent loss because you're only earning 2% on it. And so all these factors are at play. You do need to keep an eye on it and see where it's at.
So Jonathan, those 50 to 30% that you get, that is we get in Minswap and ADA, right?
Yeah.
That's the reward. So that means we also need to be aware of Minswap value. Is that 30% in terms of 15% Minswap, 15% ADA, or there's some sort of
ratio? Here's the ratio here. So on this, hover over this little eye, you can see that it's going to give us 20% in min tokens and 8.9% in ADA, and so say you're supposed to be 30% APR. You're supposed to get $30 worth of rewards this month, or whatever the time period is, and so that will be paid out $30 worth of min and ADA in those portions. So 20% of it will be I'm not saying that too right. So 30% APR, so 20% APR will come as min tokens, and 8.9% will come as ADA tokens. And so that $30 will be split into those proportions, 2/3 in min, 1/3 in ADA. And that's that $30 worth of min and ADA that if you sold them at that point in time that you harvested would yield you the equivalent of 30% APR.
The Minswap value can go down as well, right? That's another factor that we need to work on.
Yeah. So if you didn't sell them, as soon as you harvested, got your min out, if you didn't then sell them that very moment, then min tokens could drop in time, or they might grow in time as well. And so you've harvested your rewards, but they're now in a volatile token that you should think about doing something with. If you've got a strategy to end up with more ADA altogether, then maybe sell it all for ADA. And that's typically what I do with my harvesting. My yield farms, I'll harvest the rewards in whatever tokens it's giving me, NMaker, CBLB, Min, and I'll take those and put them into ADA, and then decide what to do with them, with that ADA.
Yeah, that's my curiosity. How often do you harvest? Every, is there something like what strategy do you sort of follow? Because waiting for 1 year, and I think that's quite a lot. So is it like if you want the cash flow, would you harvest like a monthly, or would you be like 6 monthly? I'm just I'm trying to create strategy myself. So I don't want to harvest too quick, too soon, and then I may not be working.
The thing you're balancing out there is every time you harvest, you are paying fees for doing so. So you're losing that 0.25% fee or whatever it is You're also paying 0.19 ADA to the blockchain. And so your overall strategy is to grow your holding. So you don't want to be paying it all out in fees. You know, every time you harvest, 1% of it's going in fees at each time. So it may be that if you're getting, you know, if you come to harvest and like on $40 or whatever I've put into, you know, it's even less than that, $25 I've put into, $35 I've put into this liquidity pool, 30% APR. Every month it's only going to be you know, a dollar or something that I'm earning. I can't do maths. It'll be a very small amount. So if I'm paying, you know, 1 ADA in fees on that dollar that I'm trying to harvest, that's a, you know, significant chunk of my harvest each time. So that's not worth doing it, you know, that regularly. So it might be every 3 months or something I'll come and harvest from a pool this small. If, however, I've put in £20,000 worth of or dollars worth of JED USDM pairing, and it's earning 30% APR, then it could be, you know, every 5 days, every 3 days, I might be earning enough that, you know, one ADA in fees is insignificant compared to harvesting $30-50 every 3 days, and I can use those, you know, earning $49 every 3 days is worth more to me than you know, earning an extra $12 in the year by not harvesting regularly. So, or, you know, whatever it works out to be. So you're really balancing how much you're putting into a pool, what sort of cash flow you could be getting out of it, and whether you can put that cash flow to work elsewhere. Because obviously, if you only harvest annually, and actually over that year you put 10,000 in, you've got $3,000 sitting at the end of the year. If you'd taken that out every week, harvested every week, and put that into another opportunity, compounded it, you could be compounding it back into USDM JED, then, you know, compound interest weekly over the year, you'd end up with much more than 30% APR, because compounding is incredibly powerful. So if you were putting it all back into the same pool, that 30% could actually end up being 90% or more over the year, because you started with 10,000 capital, but because you've been putting the work in every week and harvesting and then putting, you know, adding more liquidity, then you're suddenly earning, you know, $10,050 in a week, and then the week after that it'd be $10,102 every week, and then the week after that it'd be $10,155. You know, and so it's growing more rapidly than your capital then is growing more rapidly.
So, you know, if I leave it as it is, Jonathan, like not sort of harvest, just leave it as it is, you know, let it, then it will compound by self-compounding, isn't it?
No, that's one thing to bear in mind. Your harvest balance will stay there as the amount you can harvest. So these will grow into, say, 20 min and 1 ADA, and then a week later it'll be 40 min and 2 ADA. But you're not earning on those min or ADA tokens. They're just owed to you. So what you need to do is harvest them. If it's come to a value that's worth harvesting, paying the transaction fees, and then if you want to compound them, you'd have to add more liquidity back into this pool to earn more. Or what I tend to do is say, I'm willing to have 10,000, it's not often that much, $5,000 risked in this pool. I don't want to hold more of JED or USDM than that in proportion to my whole portfolio. So I'll harvest that and put it into another opportunity, harvest any of these rewards, rather than compounding in. But it's entirely down to you and what strategies and money rules you have. Yeah, so yeah, difficult to come up with a strategy, and really my advice would probably be to start small and just get a feel for how much is coming in each week, each month, keep an eye on it, and then grow your strategy over time. You know, I've been doing this for 2 years, so I'm fairly along that journey. But I didn't know what I was doing to begin with. I was, you know, what my strategy was, how often I'd harvest. None of that was reality until I actually started seeing, okay, this is coming in. I can harvest that. let's look at compounding some of it, and that's not really working for me. Let's put it in something less risky. I'm feeling uncomfortable about that, and then you grow your own strategy, your own rules. But yeah, do take your time. Don't splurge on it. Don't put in more than you're comfortable losing by making a mistake. It's like any education system. You have to go through primary school, through kindergarten, where you're not risking your life. You're only playing with poster paints. You can start playing with machine tools and welders once you're hit a certain level of skill set beforehand. You don't launch straight in with a blowtorch as a baby. So same rules apply to playing with finances in DeFi. Start small, don't risk too much. Be gentle with the baby that is you, because it will grow into a master of finance in a few years' time. But yeah, don't rush into things. Well, we've gone over. We've done a good stint this morning. It was good fun. I enjoyed it. Hope you appreciated it. And
Yeah, really do. Yeah.
I'll get the video up and the notes, all the links through onto Discord. And yeah, we'll catch up next week.
Sure do. Sure will do.
Great. All right. Thanks for being here again, as ever. You're hardcore.
Thank you, Jonathan.
Thank you.
Are you? When is the video going up? I didn't hear that part. You're going to send that up shortly.
The video, I try and do the same day. So yeah, by this evening, it should be up there. The links I'll drop in the next half hour.
Thank you so much. All the best. Ciao.
Have good weeks, everyone.
Jonathan, do we need to do anything on the Catalyst fund for now, or I've got 13 days to vote on?
Yeah. Yes. I completely didn't get around to talking about Catalyst at all. That's crazy. Yeah, we've got a couple of weeks to vote. I have started my list, so I'll be talking through those, and I'll drop what I'm looking at so far into. I might start a thread on Discord that we can just drop all the proposals that we like the look of.
Good idea.
And then we can each have a look at vetting each of the proposals and then decide what we want to do. Yeah, so I'll drop mine in now and create a thread. Good shout. But yeah, Catalyst is a big round again. Lots of people, lots of projects. Good. So I'll put it in the. I'll put a thread on. Actually, let's just hijack the tech community channel. So I'll drop all these into tech community.
Okay.
Start a list of proposals, and I'll pin the post as well as we go.
Super.
Good. All right.
Thanks so much indeed.
Thanks, Dinesh. Have a good
Really
week.
good one this one today. Thanks.
Cool. All right. See you soon.
See ya. Bye.